3, we'll be looking at investments, reporting, financial. So based on our understanding of, and I'm going to explain that so that those who are not here. Great. So when it comes to the foundations or foundational concepts of accounting, we'll also be looking at statements we have and what goes into each one of them. Some time specifically on the state types of expenditure and income. Then under recording of transactions, all right, then we'll look at the cash book or cash books. Then when we come to processing payments, accruals and prepayments, the rate of many people, depreciation and for bad debts, all right. So these four this will now deal with financial reporting, transactions. And here we'll make certain that we require is our trial balance into a single statement and then based. Also here we'll be looking at auditing financial reporting. Under financial reporting, the one for a sole trader or a sole computation of goodwill, as well as, of course, we'll look at the solicitor's account. So the sole trader's accounts, a typical they're going to have. And then we'll look at financial the business, all right? So the obvious one, all right? So that is the flow. Identifying. You want to take to this point, I hope everybody is fine. Okay. What it means when we say we identify accounts, a basis for initiating a transaction. In fact, for basis should be documentary. What is saying? Let me hear it. Source documents. Different types of source documents. All right. So we are dealing with source document transactions. Inward transactions and then 6 would have transactions. So for define cash transactions to start. Cash transactions are transactions which involve like cash receipts, all right? You initiate the transaction. Makes sense. I hope we are all clear with this. Great. So what is returns inward to start with? You have made a sale, all right? And the customer, upon assessing the goods, returning them. All right? It's inward. Sorry? Say the items back to you, the company who have supplied it. Created an account for the customer. Now that the customer has returned a portion of it, all right, to recognize it. Yes. So I was right when you sold description, the quantity of the unit price, all right? So let's say was 8. What that means is the amount will be how much? 4 of them are defective. And so decides to return them. You would have also recorded a debtor account in respect of the customer, that the value of which will be how much? 1,000, because a unit cost is what? 500. All right? Having returned, all right? So you use a credit note, 1,000, which will reduce their liability towards you then. We are fine with this. Good. What will be the evidence of somebody saying receipt? Is that it is a invoice? An invoice, just that this time around is a purchase. So cash. All right? Made a payment, and so they'll give you a receipt. An invoice is not that a transaction has happened. I hope we are clear on that. So never for direct cash transactions, invoice, and once you make payments, they will also give this invoice. And what if return it? What sort? Sorry? A debit note. It is a debit phone so that those online can hear. Because here, we would have, once we went a liability, would have recorded an expense, all right? And then we would have recognized the liability. And we are saying that, after all, I and do what? Debit your account. It's no. Are typically to do, because here, you would either make, correct? Here, you would make a customer's account. Here, pass a debit note onto a supplier's account. They are adjustments we'll be dealing with later. I am depreciated, all right? They are within general proper or rules. Or I hope this we initiate transaction. Source documents. Documents. So these are the source documents. Yes, types of journals. They could be in respect of fixed assets, right? When it comes, please say it for us. Into what do we record? Books of accounts. So we have books. Comes to books of accounts, we have of prime entry accounts. Books. So I would explain what both of them into which you'll be recording transactions for the further transactions. Right. Or shared sales. Here we said notes or journal. The books of prime entry. The cash book. The cash book. Or a sales transaction. Okay. Actually, it is not wrong. The sales journal or the return invoice transactions. So this is the receipt for all, and maybe today is 26th. A particular return was made in respect of a particular item. Purchase transaction, quick. Or purchase. One for me. Returns out what? What is it? So it's actually the, the account or the, and then because of that, we use the tree. Colleagues, once we are done with the books of prime entry, after we have closed those respect to a single statement that we call what? Your financial statement. Flow to it. All right? Based on, once we found that source document, we record it. That is one of the main reasons. And then once we are done recording respective accounts and we have closed the period to a trial balance, then once we have it, do we get the story, the flow? Good. The principal book of accounts. You said cash account. Did anybody say bank account? So what? So it should be bank account. It is both. Great. And we'll be dealing with 5. All right? Adjust processing and adjustments. In case of sales transactions, sales book. Okay. Okay. So here, we call them, all right, they are called ledgers. All right. Ledger. Return inwards transactions. The refreshment times. Any takers? So this is what it is of sales transaction, because a return inward in a sale transaction ultimately is a revenue and receivable. And so for you to be able to tell to the sale, and so that will also be, does it make sense? Do we understand it? And I said it, the books of printed into, all right? But then, all right, the books of, or the principal sale, do not happen only in respect of sales transactions. I need to be able to tell the true value with the return on the other side. Once you have returned a portion of it, the true value that I should be expecting from to the sales, and that's why we have both of them sitting. Purchases. So that's it for these two. So here, it has generally come and dump it here. So this one is like how or are we good? So that the transaction, it is here and classifying, get it. And so comfort to is a type of books of accounts. Now, in terms of the activity, the transactions. Okay, everybody has seen it. I like your sincerity. I like your. Is that for the opened at the beginning in there? Summary. That's the essence of the trial balance. It's used as a summary from the various principles. People, can I clean? There are 4 different columns. You've written everything to tell me, take me through the full. Yeah, fine. At this point, Benji is cleaning. Let me just indicate there will be 2 sides of it. Action has a debit and a credit of the various accounts. When you, okay, so you are facing me. So let me do it for your benefit. Should be equal to the same thing. All right? So another thing the trial balance does for us, for our transactions. All right? So it's in the trial balance. Typically, this is how you see the trial balances detailed. And of course, these sum up correctly is where, for instance, a wrongly recorded transaction inadvertently have recorded a particular transaction on the other side, I read disparity, right? There'll be a difference. On the debit side, I record, and the second, which is 200, but inside the account view, out will not show you from the out, correcting error. Ditto is any. So that is one of the things that you should know for certain. I've been able to deal with the 4 activities. So I can clean this, the trial balance. The 5th activity here is Companies Act, or you can Google. Any 5. Microphone, please, so that I can speak into that.
Okay, I'm reading from say, comprise a statement of financial
Statement of
income.
Statement of comprehend of cash flows.
State.
And then
Lastly,
summary of significant accounting policies and explanatory notes
to the
financial state significant and add to the nets. That's right. Good. There's a statement of financial cash flows. There is the statement to the financial. Sorry? Therefore, you realize here, which means in and of to these financial statements and their preparation, accounting concepts. So these are the 4, the B part, and let's listen to that. Okay, so start from the preamble and
with international financial.
So when you or
adopted
of
Ghana or any other stand.
The accounts have an adding, then we tell where it was uprooted from. So we are a stipulation of the International Financial Report requirement to prepare the explanatory notes to the financial statements. All right. So anytime you get International Financial Reporting Standards, which are we good? Great. That or any other standards as will be added with. And for you to know also who set the International Accounting Standards. So they set the International Financial Reporting Standards. And Ghana, through the Institute of Chartered Accountants Ghana, have adopted the set of financial statements. I hope that is clear. And what they require, what story they tell, and what they require of us. Okay. The first statement is what? What is time? It tells us, and what that means basically, take any company. You are dealing with, let's say, a company like, but the question is, either have financed the acquisition of those assets who are the owners or members of the company, or so the two sources of financing for any company is equation as we have it as what? Liabilities. Also, who else was confused by it? Okay. Do you now have class? It's identified by its assets. It's equal to capital minus liability. See of the underlying concept. That's why identify a company by its assets. But then how do those, and if you study some small accounting before, small mathematics, the word or, all right, and that's why we say financed by debt. This is the accounting equation. Debt. Assets are equal to capital. This question. What are assets? What are assets? So assets are economic resources of a past event. They use economic benefits to the entity, owed by an entity as a result of past event to the entity. So now, economic by an past event bring future the okay. So an asset must of necessity, right? It should be it must be controlled by the entity. Ownership. Imagine currently with our land administration, a foreign, and in the case of a leasehold, there are residual 50 years, the time over the land for that period. But the freehold interest, before he can recognize that, he is required to recognize that item as an asset in his books. Does that make sense? Company. And the shipping company probably 60 years. But then there are reversionary rights, which will be going back to the shipping company. All right? It makes no sense to say are required to recognize it as an asset. Another example, tenancy agreements. But on the assumption that Ghana School of will just make rental payments for the space as an asset in our books. I've not seen what the value of this space as an asset consideration. All right? So control, what we are calling action, which gives rise to rights, then we need to consider to recognize it. Use of which? Use. Either we are using it internally, it's either through usage, and that's why the relevance with no intentions of the recognize it as an asset. So these 5 elements, or 5, need to be present. This, as an economic resource, it's controlling. That's an economic benefit that the Ghana School of Law is making. Selling the item like an inventory, right? They sell it to make economic benefit. So now we understand what an asset is. Now, let's ability is the reverse of an asset. So somebody give us the debt. Your mic is not on. If you could turn it on. Yeah.
Economic resources controlled,
Okay.
by the use of which is expected to bring entity.
Okay. So he says a liability is some benefit or debt. Anybody else?
These are debts, expenses, anything that
Okay.
That
So liabilities. So in your definition, work to reset your response.
from the explanation, you said that assets are economic resources,
Yeah.
the use of which is expected
To the entity.
the entity.
That's asset.
That, my understanding is what I've just explained.
Debt and okay. Okay. So after Kojuda and Gloria, yeah.
So, the results of past events, the use of which
Costs.
or
Gloria.
As a result of past events,
Okay.
the use of
Lawyers are working and they are defending their. True feelings. Microphone, please.
So in your initial submission, you mentioned that the assets of a company comprises of the capital and
I said was assets are fine.
that is the assets of the company. Is that
Your total assets. The asset is not the value of the sum of the. You get it?
equation?
Yes.
And having bring some economic benefit to the company. It is owed by the company and it's economic benefit.
No. So the company may have gone for a loan. So what gets to be? Do you understand that?
So what do you use of the cash then?
So they use the cash. I see that you are putting one side of the go for Benji PL, but then we have cash that we are using. And we owe that obligation because of a certain flow out economy. Get it? And you get activity or transaction. It's a loan transaction. I hope that makes sense. So the benefit of the sub, which is an asset, but now of how it was financed, and how it was financed, the lending entity, then it is a liability owed. Yes, owed back for which future economic
So the benefit is for the entity.
party. Exactly. So that's what it is. That you consider the benefits. By about how once Ghana's all of that, all right. But this same space, it is rent and future economic benefit will be flowing as the same subject matter. This space obligation to their supplier. Question. Abilities. Good. So this is the thing about a transaction you had entered into with them. All right. It will be flowing out of the entity as a result of a transaction we entered into, which is the past event of the entity. Do we understand those online?
all right. So, just want to know claims owed by the entity.
Resources done. So if you owe a resource,
So it's always an obligation,
obligation.
that is owed.
exactly,
All right.
a flow out. What is equity? Microphone equity. But what is equity really? So be more meaningful. It is the account is concerned. It represents the shareholder as far as their interest in the company is concerned. We went through this accounting equation, dealt with a topic in a topic. All right? 1 o'clock. There's a hand up. Yes.
Would it be
Okay. Please go ahead. Okay.
so? Is it erroneous to think from time to time, or
Of which are recurring. Arrangement or the settlement arrangement secured a bank overdraft Once I notify it as recurring or other. Yes. Any other question? Any other question? First, this way, you have assets. Right. Right this side. All right. I beg you. It's from what you see here is as something significant you'd identify current assets, abilities. All right. The counting, there's a period known as period, the next 12-month period. And it's all right. So if there is within the next 12-month period, then that the realization of which is expected a realization or use of that asset, current asset. It will be going beyond 12-month period when it comes to if its settlement is expected beyond the next 12-month period. Good. So that's how we have what is current and the non-current assets. Right? Table, chair, all of those items. They are called fused. All right. So property, plant, and equipment, or fixed assets, we call property, plant, and equipment. Intangible assets, they are where computer software is intangible beyond a 12-month period. But for property, plant, and equipment, paid fixed assets, right? We all know about that. We amortize it. It is English. It means property, plant, and equipment. Of property, plant, and equipment. Rental company that rents cars. That's a motor vehicle. The cost of holding it, that's where the difference is. Company to rent it out. The cars that the car, once it rents out as part of its rental business, it will be classified as what's clear. All of us are fine. Good. And we have an office. But then we've also, yes, Clinton. Say that again.
The investment.
So I am happy you brought this up. It is not among three things. Property, plant, and equipment is your stock in trade. And when we say same, real estate company has buildings that it rents out. These are three different categories of buildings. The one that it is holding to rent out is inventory. So the buildings it has put together, it has built and is renting out, is its inventory. Do we realize it through sale? You'll be selling it as quickly as you can. Make sense? Does that make sense? Yes. Yes.
And it's receiving dividends as
Now
a.
you are talking, you have elevated the conversation. Recognize it differently as investments, so deeper and non-controlled entire assets. That's if the company has control for now. Right now, this. Good, we are fine. So we've dealt with inventory. Different types of inventory whilst we are here out, right? So that's trade inventory. If you're a manufacturing company, your reals, all of those things, they are all raw materials. They are inventory. But at the end of the accounting period of manufacturing inventory, which is the trading inventory, trade inventory, right? Finished goods inventory, right? Then there are other types, right? Something like a mining company items that they could use as small parts of. For the purpose of this course and reading from the course, right? So for the purpose of this course, that's wobble. Accounts receivable, say that again. Selling item, it gives rise to revenue and prepayments. So what are prepayments of that transaction? All right. So paid meter in their house. Most of us use prepaid meters. All right. So imagine that value, that it was something like that we call prepayments. Do we understand that? Similar at the beginning of the year. And you paid it at the beginning of the year. At the being consumed as premium. Do we all understand? 480,000 for 4 years is 120,000. So at the end of the first year of 360,000, which you have paid prepayments or prepaid expense. Oh, it's 1 p.m. Okay. So you are hungry. You know what cash is, right? So bank is your money in your bank account. Done with the asset element. Accounting equation. What's the accounting equation? Say it loud. Must be equal to capital or financial position. It's a rent. Go for lunch and we'll be back. Let's go for break and come.